Hello Forex traders, welcome to this video of Admiral Markets. We're going to take a look at what happened with NFP on Friday to the charts, and our weekly overview is going to be also including the cable breakout and of course taking a look at our special educational webinars that are going to be presented this month in December. First of all though, the risk disclaimer explaining that trading for exchange is considered high risk just like any global financial markets and products and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and I do thank you for your attention on that. First of all, let's take a look at the euro dollar. NFP had a negative effect at first. NFP figures for the US were very good, in fact, and the unemployment rate and NFP both positive for the dollar. And we got that reaction to the euro dollar as the euro fell from 136.80 to 136.20. You can see that fall right in here where I have the green arrow. But as mentioned in the trading room at Admiral Markets on Thursday, any dip should be seen as a pullback for more upside from a technical point of view, and that's exactly what happened. We got the rebound at the 38.2, close to the 50 fib, for one more upside up to the minus 272 target. So now that we've reached the target, what do we expect now? And if you look at the 4-hour chart, you can first of all see a beautiful uptrend channel marked by blue, but you also see that price is right at the 78.6% Fibonacci retracement level at 137.15. That is a major resistance and one that shouldn't be underestimated. The currency has stopped at the previous fibs, the 38.2, the 50, and the 61.8. So there's no reason not to think that the 78.6 would have not the same effect. So we should expect and plan that. I'm waiting for retracement now, just curious to see what type of retracement we will get on the euro dollar. Will there be a correction like this, a bull flag or triangle? Then I'm expecting one more breakout up to the 886 and a minus 618 fib at 137.60, 137.80, 70, sorry. Or will we get more steeper retracement? Then we might see a bounce, for example, off the bottom of the trend channel again to the same target. Or if the uptrend channel were finally to break, then we could see a bigger reversal trade down to at least the bottom of this blue line, which is the weekly or daily trend line, and maybe even more. So that's the main scenario I'm looking for on the euro dollar. At the moment, waiting to see what kind of correction we have, and then trading it either a breakout trade to the upside, bounce to the upside, or break to the downside. Let's take a look at the cable. As promised, there is a breakout trade, in my opinion, on the pound dollar. We broke already out of the weekly resistance right in here. We have the green circle. That was a very nice trade. At the moment, the pound is making a bull flag as indicated by the green lines. Let's zoom in a bit there on the 1-hour chart, and you'll see the bull flag moving down, but also out of that uptrend channel. So it's going to be interesting to see if we do get the continuation. That would be a lovely breakout trade to the upside, and one I would gladly take on this pound USD. However, if price were to break below this support, then most likely the price is actually reversing and we could expect a reversal trade maybe to the downside. Now of course I'm more interested in with the trend trades than the reversal, but if we do break this 162.90 support, the likelihood is decent that we could see a bit more reversal or retracement to the downside, and primarily also of course as well because of the break out of the uptrend channel indicated by the blue lines. From a 4-hour perspective though, the upside break seems more likely. Oscillator is back to the zero line, and also we've broken out of the weekly resistance, which means that the first move could be a break, that this could be a pullback, and we're now could be expecting a C of continuation. The target, if we do break, most likely to 165, if not all the way to 167.50, which is a big monthly resistance point. Last but not least, the dollar yen. Here too we were looking in the trading room at a bounce off of 101.60 or 101.10. That's exactly what happened. The higher one, 101.60, providing support as the target and getting the bounce on the dollar yen, and then the subsequent break of the trend line for a beautiful breakout trade to the upside. So this was lovely trading, and if you were in the trading room, you know that we were talking about this. So we're now looking at a potential resistance though at around 103.72. That is something definitely to be aware of. Price is pretty close to these resistances, and I would rather see a hook back, for example, to the support level in here, the support of this 4-hour fractal, or wait for the break, sustainable break, pull back, and continue. So those are the options in my opinion, because at the moment we're very close to the resistance and price could be a bit, could respect that level of course, and it could go sideways like that. If that were to happen, then I would still consider a break a decent opportunity as well. Regarding the live trading and webinars, 12th December this week we have Oscillator Exposed on Thursday. Next week we have a webinar on the flashback of 2013, and then 2014 expected the 2nd of January. Live trading, we got wave and fib trading, chart pattern trading, and intraday trading this week, so a lot of good stuff coming up. Next week we got Oscillator and Fibonacci trading, and then the 24th and 31st the year-end trading. So lots of choice here. I hope to see you soon and wish you all great trading. Cheers.